The best way to get more profitable is always to change your pricing. Cutting costs only gets you so far. But when you think about profitability, you always need to look at your pricing model. Yet why accountants haven't done that in the past is surprising to me. I think you have to look at it as, what do I want to do with my firm? Do I want to stay where I am today, or do I want to build for the future? Because your competition is not the firm next door. It's not a big firm across the country. It's a technology company that's coming in and merging with professional services that is going to be your competition. And I think so many firms don't even realize who their true competition is. It's not like AI is going to take their job. Let's get rid of that thought. It's the fact that the business model of the CPA firm is no longer relevant. When you see private equity coming in and buying up these firms, when private equity wants to exit, who are they going to exit to? It isn't going to be someone with a CPA license. It's probably going to be an IPO or someone else, right? So the firm model is going away.
Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in. I am thrilled today to welcome the Radical CPA, the Kim Kardashian of accounting, a consistent top influential person in accounting, Jody. Hi. So Jody started in tax at a public accounting firm and has been an outspoken advocate of bringing accounting into a digital age using AI and automation. She's experienced, optimistic, outspoken, and I can guarantee this is going to be a fun conversation. All right, so let's go through some career highlights just to set the tone. You are a 3-time author, the Radical CPA, From Success to Significance, and you just finished your latest book called Radical Pricing in Accounting. And so this bold statement comes right from your book about pricing in the future. From working in an old school firm to leading a new firm for 14 years to working in venture-backed technology startups, I've gained multiple thoughts about the future. Through the lens and understanding, I now truly understand the differences between technology companies that sell software and professional services firms, and they are quickly evolving into a new technology company that just so happens to be in the business of accounting and tax. We need to understand how we use technology at the heart of our business, and we'll only be successful if we can change our pricing to make sure we get paid what we're worth and clients get the value they desire. So that is a big radical idea, hence the title. Let's dive in. Jody, welcome to the show.
Thanks for having me. I'm so excited to be here.
All right, let's go. So you've worked as an accountant in a public accounting firm, as a radio host, as a founder, as a board member for tech companies like Bookkeeper, Truly, and April, and you've written a few books. So what do you think is wrong with accounting today?
So I think accounting firms don't have product market fit. So they were built in an old school way, in an old world. The world has changed significantly. And it began when cloud accounting started. There was definitely a disconnect in what consumers wanted to buy from accountants and what accountants were selling. And it's only increased to make that divide huge. And accountants are still selling what they used to sell in the year 2000. And consumers don't want to buy it. So there's a huge disconnect in the world. And there's some new firm operators who are getting it and starting to get it, but they haven't evolved as fast as they should. And the reason they haven't evolved as fast as they should is because the technology companies who have created technologies for accountants to use forget that it's a B2B2C world. And so they build technology for the CPAs, but they forget that ultimately those CPAs are serving the customer. And so it's not consumer friendly. So the accountants are stuck in the middle because the technology companies don't build us the software we need. And the consumers want something different. And so we're in this conundrum of like, where do we go? And accountants just want to serve their customers. And it's a chicken or the egg situation, right? Do you change the CPA? Do you change the technology? What happens first to get us to a world where we're all living happily together and the consumers like us and CPAs are happy doing advisory work and the technology just works? Can you solve that problem?
I don't know if I get somebody. It feels like this is a problem that we need to solve together as an industry. What do you think were some of the driving inflection points that got us to where we are today?
So when I started years ago, it was like 2010. I was a young firm owner and we started to use the cloud. And what happened is it was the internet that changed it. Real time is really the disruption. It's not the software. It's how do you work as a CPA, how do you work with a client in real time? As a CPA, you're trained as a professional to do the work, and then someone comes on top of you and reviews it before anyone on the outside ever sees it, right? And the real time was the disruption. And what happened was the CPAs never adapted to the real timeness. They never figured out how to train. They never figured out how to change their professional standards to meet the real time world we live in. And that's truly the problem. It's real time. It's not the technology. It's not the CPA. It's the real time that we need to figure out how to work together in.
I have so many paths I want to go down, but I think what might be helpful in order to understand how you got to the place where you are today in your career is to start back a little bit from the beginning. What was the reason why you got excited about accounting in the first place?
So it's funny because my dad was an accountant, and this is a funny story, right? So I grew up in a tax firm from the time I was 6. I was part of a home office before they were trendy because my dad did 1040s at home at night, right? We used to go for ice cream in the station wagon during tax season. That was the only time I saw my dad. So, but I went to school and in high school, I liked accounting. It clicked, whatever. When I went to college, I wanted to be a psychologist, which a lot of CPAs are psychologists. They fill that role too. And my dad said, no, I'm not paying for you to go to school. You go to school to be an accountant. I'm going to pay for something that's tangible, right? Makes sense. And so that's how I grew up in a firm, right? I grew up in a CPA firm, and I went and I worked for what I would call traditional firms, right? 7 partners, 7 different ways of doing things. And that's kind of where I cut my chops. And I came off a really bad tax season and said, okay, I'm not doing this anymore. It wasn't conducive to my life as a mother. It wasn't working. And I said, there's got to be a better way. And it just so happened that was the time when technology was changing and the cloud was just starting to be popular. And I realized that if you utilize technology different, you could get your time back and you could actually innovate. And what happened is because I had constrictions, right? I couldn't do everything because I had my young family at the time. I did things differently and I iterated through changing the business model, which nobody called it a business model at that point. It was just, I was running a CPA firm and I was doing things differently. And as new technology came out, I adopted it and played with it. And then I realized you can't build 2 minutes. So I had to change my pricing structure and I had to figure out how the customer was going to be part of the firm, because a lot of time with cloud technology now, they were doing the work that we used to do behind the scenes, right? So all of that stuff, I just iterated through it to get to kind of where we are today. And in 2020, I sold my firm after owning it for 14 years. So building it from really scratch. I had a little bit of my dad's book, but it wasn't significant. It just kind of evolved to be New Vision, which was sold in 2020.
And then over the time as you were building your firm, you talked about innovation and maybe thinking about sort of the cloud. Was there a driving theme behind what it was that you were trying to accomplish in your firm?
So it was the theme that I got to go home on time, right? So what I realized by utilizing these new technologies, all of a sudden I had my time back. Payroll that used to take me hours, PayCycle, Rene Lessert, he's Bill.com founder, right? I always say he fundamentally changed my life because he invented the software called PayCycle, where now the software just worked and it transferred payroll. And basically, instead of having to do all those forms that we used to have to do, I had my clients enter the numbers and I billed for it and I got paid to do payroll. And all the CPAs were caught in, well, I'm not going to pay, I think it was like $29 a month at that time to pay for software that they didn't have to do anything with. And I was like, why? I charged my clients more and I did nothing. And they couldn't wrap their heads around not selling the work And instead of just selling the software that facilitated the work, right? And then what I did is I built advisory on top of it. So then it was like, well, if you have a payroll question, you call me, you don't call them. And the software did the work, but I did the advisory for the software around it, right? And so that was the early days. And then, at that time, the software only got better and better, right? So then Intuit, QuickBooks, QuickBooks Online was there, but when Xero came in, it made their software better because they pushed the market. And so it was having the need for time and not wanting to work a bazillion hours a week because I couldn't work 12 hours a day. I had young kids at home. That wasn't an option for me. So I had to figure out how to make money and still go home on time. And then what happened is when I realized that this was great, like I wanted to tell everyone about it because CPAs had such a crappy lifestyle, right? It was like, how could I tell my peers, like, hey, you should do this because you're going to get to go home on time and you're still going to make money. And unfortunately, the profession saw me as a lifestyle business, right? Well, it's not a real firm. Well, my not a real firm was more profitable than your real firm. So it was really just changing it. And that's how I became kind of the Kim Kardashian spreading the word, because it was about giving CPAs a better life and having them to get to go home on time and not work the crazy hours that, kind of the firm that I grew up in.
I as I'm listening to you, it just sounds like something that makes sense. You're still delivering the value to me or your clients, which is, I just want my payroll to run compliantly and on time, whether you are spending 3 or 4 hours or 6 hours or 10 hours doing it manually, or you click a button, or it even just self-runs along the way and you're over there, then that doesn't matter to me. I'm getting the value of my payroll is run and it's run the right way and there's somebody looking out of it. What is holding people back? What's the holdback for accountants?
I think it's because that's what they know how to do. They know how to do the forms. They know how to fill out the numbers, and they didn't think beyond it. And they don't think in a sales way, right? Like they're really technicians. So a lot of that is like positioning and marketing and sales driven, because I had to build my own book. So when I joined my dad, the first thing he said to me was, go find your own clients. I was like, whoa. And so if you're always used to being technical, that's what you know, and that's what you feel comfortable in. And now you're asking them to kind of think a little bit differently, have conversations that it's not that they're not capable of doing it, that they're just not used to, that they haven't been trained on. And so it's uncomfortable, right? So they stick to what they know.
God, it's like still so hard to wrap my head around. I'm guessing you too, because it gets really into the crux of your latest book, which is about selling outcomes versus selling time or so. And it seems like it's sort of a hard transition. Can you talk a little bit more about what was the impetus between writing this as an actual book versus continuing to be just an outspoken advocate online?
So I think what's been happening is there's a lot of people who are talking about pricing now, right? Like it's very trendy or topical in the conversation. But I think there's still a lot of people who have tried to do pricing and they say it doesn't work. Well, the reason pricing doesn't work is because it fundamentally changes your firm at its core. And unless you're willing to do the work to change the back end, pricing the old services differently is like putting lipstick on a pig. It's not going to change anything. It's just going to make you frustrated, your team frustrated, and you're going to say you're going to lose money because I don't know how to price that, or I can't price that. It isn't until you actually change what it is you sell, you productize your productize and standardize your offerings, package them up, and you say, this is all I sell and this is who I sell it to, that pricing works on a firm. Until you do that, it's very hard to sell accounting services. And the reason being is because they've always sold them by the hour. So it didn't matter how the work came in. Someone would say, oh, I'm going to charge you $300 an hour. And you didn't have to be efficient. You just had to do the work, and it didn't matter how you did it. All the stuff for pricing to work in a firm has to be changed on the back end. You can't just change the pricing. And that's the business model change. That's the hard part. And so what's been happening over the last few years is everyone talks about pricing, but nobody's actually gone into the weeds on the backside that tells you all the things you need to do behind the scenes in your firm to actually make pricing work. And that's what my book is really about. It's not just, oh yeah, put things in packages and, call it gold, silver, whatever, platinum, right? It's actually, okay, what do you need to do with your professionals in the back end so that they know how not to overwork a file? What do you need to do with the tools that you're going to use, and how do you position those tools, and how do you price to sell them? What are you going to do with all the other things that happen in your firm so that it works right? And for someone who's in technology, they'll say, oh, it's just productizing a service, right? Like that's very common, but in professional service firms, it's unheard of, right? Because they never productized anything. So it's just a different way of thinking.
Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Quick math. The less your business spends on operations, on multiple systems, on delivering your product or service, the more margin you have and the more money you keep. But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform. That's one source of truth. With NetSuite, you reduce IT costs because NetSuite lives in the cloud with no hardware required, accessed from anywhere. You cut the cost of maintaining multiple systems and improve efficiency by bringing all your major business processes into one platform, slashing manual tasks and errors. Over 37,000 businesses have graduated to NetSuite, so do the math and make the move. Startup founders and execs running scaling businesses know all too well how easily their systems break down and expenses skyrocket. NetSuite is a proven way to cut costs and boost performance. And by popular demand, NetSuite has extended its one-of-a-kind flexible financing program for a few more weeks. Head to netsuite.com/zen. That's netsuite.com/zen. netsuite.com/zen. Today, I want to make a bit of a personal appeal to anyone working on a SaaS app or website. If you spend any time on the internet, you probably have interacted with chatbots in the bottom right corner of sites. Most are really annoying. AI is making them better, but still I often just get really useless generic answers out of these and end up just wanting to talk to a real human. It felt to me like AI shouldn't just make chatbots marginally better at text responses, but that they should enable a new type of web assistant, something that feels like you're talking to a human support agent who is co-browsing alongside you. CommandBar is building that user assistant. Companies embed it into their web app, mobile app, or website, and they get a fully generative chatbot that can give personalized responses that refer to a user's past chats, perform actions directly on behalf of the user, like looking up account info, and even start browsing alongside the user to show them how to do something, like a tour guide. It can also nudge users when they seem confused or frustrated. I love when I encounter CommandBar in websites. It's white labeled, but at this point, I can tell right away. CommandBar already reaches more than 20 million end users with major customers like HashiCorp, Gusto, Freshworks, 6 Sense, and more. See for yourself at commandbar.com/MOZ or follow the link in the show notes.
I think if we take an analogy outside of accounting and we think back to an automation that most of us use pretty regularly, not weekly, is the ATM. And if we look at the history, we plot the history of ATM installation and teller employment, I think it's a good example where how automation can actually lower the cost of delivering a particular task. But the flip side is it has allowed banks to take on more customers and grow the category and provide a higher value-added service to their customers. And then we think sort of anyway, so if we think about that, what advice do you have for the counter argument, which is, yeah, that's not like a good analogy. This is my firm, and I might know this is the future, but like I'm actually having trouble taking that first step.
So I think lots of CPAs would double count the cash that comes out of the machine. And that's where that's where they get caught up. The automation is doing all the work, but the accountants don't trust it, and they're double counting everything. So even with the automation, the accountants are double checking everything, and it's part of their nature. So you have to help them get over that hurdle. The funny thing about ATMs is, so my daughter's 24. So when she went into a bank for the first time, she said, "Hey mom, the teller's just like an ATM." So like, it's so funny because she didn't even know a world where an ATM didn't exist. And that's what I think is going to happen, in another 10 years, where they won't even know the difference, right? But that's the thing is CPAs want to double check everything. They don't trust it. And to be fair, for many technologies that we've been promised the world, and then the technology didn't always live up to what was promised to us. So for them, I think, there's a little bit of skepticism that should be right and is valid, but at a certain point, you have to trust things too. So trust but verify.
Trust but verify. Any specific examples of innovation, if you think about over the past, say, 10 years or so, that delivered on its promise or maybe even exceeded expectations? And then anything that maybe doesn't exist anymore that set an expectation and hasn't been able to deliver?
So I think most software now, it's that is rolled out to the market is solid enough. But the problem is because CPAs live in this world of exceptions, they want everything that has an exception. And so they don't even look at a technology unless it handles their specific exception. And so what I did in my firm, which I think they have to kind of think how they think about technology, is how do you use technology to get 85% of the way there? And then use those, only measure like the last 15% as the exceptions. And that's where the human comes in and fixes it or adjusts it or whatever. But the problem is most CPAs say like, oh, we can't use it because it doesn't work for us, instead of using it to get 85% of the way there. And then, just fixing it, fixing the frosting on the top. Right. So I can't think of any solid technology off the top of my head, because I think I'm a lot more forgiving than most CPAs, but I guarantee whenever you show any sort of technology to a CPA, they always look for the exception to the rule instead of the, does it do 95% of what I want it to?
What do you think has held the industry back from automation more? Do you think it's the software that has been trying to create, or do you think it's fear? Where if you had to balance that on a scale of 100, how would you weight your pennies?
So I think it's not all the vendor's fault. I think we live in a deadline-driven world. And so for adoption to happen and planning and change management to happen in a firm, you need the firm to participate and you need the vendor to participate. Because we live between seasons, we live between tax season, or we live between close, right? The vendors never have the opportunity to iterate fast enough to solve our problems, and the CPAs don't have the opportunity to adopt fast enough. So I think it's an industry problem. I don't think you can blame one side or the other. It's kind of both together. And then, we've had these legacy vendors for 30, it's only in the last 2 years, 3 years that money has even come into the space that they want to kind of change things. Otherwise, we're left with CCH, Thompson, Intuit, and those are your choices. And I'll say you get what you get and you don't throw a fit. Like, what are you going to do if these are the tools that have been given to you? You have to figure out how to work with the tools to do your job the best you can.
I'm saying that I'm laughing. It's me or my wife feed our 7 and 9-year-old. It's like, you get what you get and you don't get upset. It's like, you take it and that's what it is. One of the things you mentioned before was that the pandemic became a forcing function to have people have to move to be cloud native in a world. And so it wasn't the industry necessarily pushing forward as fast as it was a pandemic. If we also then take a look at sort of some of the Wall Street Journal and the FT reports, is that accounting is becoming a declining major in college. And a lot of people have sort of left the industry to pursue accounting adjacent or entirely other careers. What do you think becomes the trigger point in which firms are able to adopt more automation, or drives the industry to adopt more innovation?
So I think the fact that you can't find people anymore now, like a lot of people are going to India, the Philippines, whatever, to find talent because they've run out of talent in the US. But I think when you realize that automation can kind of supplement that, which I think is a good thing, that like firms are more open to different processes and to different tools and different automation. So I think we're starting to get there because of a forced constraint, not because they thought about it or they wanted to be innovative. It's just at a certain point, if this isn't working, what do I do? And I think that's why smaller firms too were innovative faster, because the talent problem has never been like, small firms have always had a talent problem because we can't recruit from the big universities. So I think that's a lot of the reason too why small firms went to technology faster, because they couldn't find people. Whereas the big firms, it's just now they're starting to have these problems that as a small firm owner, we've had since the beginning of time, because it's very hard to compete.
In some of your either lessons or research in the book, any sort of key insights that you can share, either that were a surprise to you in sort of thinking about how to adopt pricing, or some of the key insights you just want to share with the audience in general?
So I think the biggest thing for me was actually realizing that pricing was the problem as a whole. Because I think when I built my firm, I was changing my pricing as I built it, right? So it wasn't like I went back and put pricing on top of it. And I think that was the big realization. And the funny thing is it makes sense, because we're accountants. We should know these things. The best way to get more profitable is always to change your pricing. Like cutting costs only gets you so far. But when you think about profitability, you always need to look at your pricing model. Yet why accountants haven't done that in the past is kind of surprising to me. So I think it was surprising to me to realize when I went back and I kind of packaged everything that I've done over all these years and put it together, I was like, oh, aha, like, duh, like, why did it take me so long to realize that this was like the key piece of it? And I'll say on the other side of it, and Ron Baker's always said that the timesheets are the cancer in the firm. That's the other side of it, right? Like, people can change their pricing, but if you still track time, if you still measure it, that's what people go back to, and they don't actually embrace a new way of doing things. They don't embrace the innovation. They don't embrace all the other good things that come with changing pricing if you're still tracking time. And so that's the other thing I think that a lot of people don't want to hear. But until you really cut off that timesheet, you're still going to be like straddling and not really in the full opportunity of profitability that you could be if you just got rid of the timesheets.
If we think a little bit about talking to the market right now, which what your book is doing is trying to give people a blueprint and a playbook on how to make that change. And what was really nice about each chapter is broken down, and there's some questions at the end to help challenge yourself and challenge your thinking. And so is there any particular part in there, if we're speaking directly to a firm owner who has been, I have my book, I bill by the hour, how do you start tactically making that transition to value-based pricing or value-based outcomes?
So I think the first thing is you start with the clients that love you, right? So like start with your fans. You don't start with the people who are always giving you a problem, right? And I think the other thing you do is you really start to answer those questions, and you think about it from the perspective of, I'm a professional and I sell professional services, and this is what my firm is good at and how we sell it. If we look at the market as a whole, everyone has kind of said, oh, well, we're selling payroll and bookkeeping and tax returns. Well, that's very superficial. Like, it's a very superficial pricing model. If you're a professional and you have superpower that you do something very particular, that's what you should be kind of thinking about, how you're going to position that so you differentiate yourself in the market. And I think that's one of the key things that, like, most professional service firms haven't really conquered yet. When you think about, because they're professionals by nature, they have unique industry experience, they have unique, like, they're very unique. And typically the firm is built around that partner's, or if it's a bigger firm, that partner's strengths and what they kind of know in the marketplace, right? So I would encourage them to think about what it is that professional person brings to the market and figure out how to amplify it and package those services as really being unique and special, and sell those versus just, oh, we sell accounting and payroll and tax. Because again, how do you want to differentiate yourself in the market? And that's what's going to bring the value up, the price up, and makes you someone a specialist or someone that you want to, that consumer wants to talk to, because it's different, right? Because otherwise, that's the other thing that most CPAs don't realize is the market doesn't really know if you're good or better than the CPA sitting next to you. Because we think, oh, well, we're different because of this, this, and this, but we never really have those value conversations, or we express those things as to why we're unique. And those are the things we need to think about. And so when you go through the questions in the book, I think what it does is it kind of lays that out. So if you haven't necessarily thought about what makes you special or unique or your firm different, it kind of gives you that opportunity to write all those things down, that then you can go back to either your marketing team or, think about how you're going to market what makes you special.
Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Fast forward to the end of 2024. Think about your goals. What can you do right now to give yourself the best chance of succeeding? If learning a new language is on your list, you absolutely need to check out Babbel. Babbel offers a range of learning tools, self-study app lessons, live classes, and even podcasts, which have always been my favorite way to learn. Studies from Yale, Michigan State University, and others continue to prove Babbel is better. One study found that using Babbel for 15 hours is equivalent to a full semester at college. Babbel isn't just a game to kill time and make you feel like you're learning a language. It's not overly academic or rigid either. It's all about learning language for the real world. Babbel stands out because it's designed by real people using a modern conversational teaching approach. It's not always easy, nothing worth doing ever is, but it's straightforward and designed to help you start speaking in just 3 weeks. With Babbel, I was able to brush up on my intermediate Spanish to ramp up for travel to Argentina last year, and was able to set clear goals based on how much time each week I wanted to practice. Join millions of Babbel language learners across all age groups. Here's a special limited time offer for our listeners. Right now, get up to 60% off your Babbel subscription, but only at babbel.com/Torenberg. That's babbel.com/Torenberg, spelled BABBEL.com/Torenberg. Rules and restrictions may apply.
I generally find the first one is always the hardest, whether it's your first partnership or your first step out of the plane when you're skydiving or whatever that thing, or your first step in journey into entrepreneurship. If we think about just getting that first conversation over the line, do you think that it makes sense to kind of try and offer the same price, but just convert it? Like if you bill by the hour, and look back and say, what are some just very tactics of how to get started on that very first conversation? Say, listen, I'm going to match the average price you paid. I want to make it a fixed price along the way. I don't bill by the hour. What's that? Can you walk me through, pretend I'm the client. What's that first conversation?
So the funny thing is a lot of CPAs are already doing fixed pricing in their tax work anyways. They just don't call it that, right? So if you look at a tax return, if let's just say you're selling a tax return by itself, a lot of times CPAs just say, oh, what did we bill them last year? Right. And then they maybe up the price a little bit, but that's it. They don't really change it. They don't really look at what was done differently this year or not. Right. So in effect, you've already been fixed pricing it. You just didn't tell your customer it was a fixed price. Right. So that first step might be just be like, hey, take a chance. And next year, send out all your invoices in January and see who pays. Right. Before you do those tax returns. You'd be surprised. And if you want to increase it a little bit without even like looking at the differential of what's really changing. And the CPA will say, well, there's going to be, someone who's going to come in, who's going to have a major transaction, and that's going to be different. And you can always put in there a clause that says, based on, last year, we believe this is, you could put in some sort of caveat language, right? So that if you do have someone that had some crazy real estate transaction that now is outside of the scope of your regular work, you can step back and you can tell the client, hey, look, this was unique and different and whatever. So there's lots of ways to kind of inch your way through this. But the interesting thing about that is CPAs forget that the cash flow value of having all that money come in January is huge to them. That they don't even think about it. And that was one of the things that I did when I started. The reason I started pricing up front was because I joined my dad in June, and he's like, go find your own clients. And I was like, well, tax season's not till next year. I got to figure out a way to get paid before next April. And so I was like, well, I'm going to charge them up front. And so became my billing model, right? There's lots of different ways to do that. And the other way you can do it is just start bucketing your clients, and then like you kind of see how they fall out, because I would argue that most firm owners already kind of have verticals that they kind of work with, even though they haven't necessarily sorted them out as such. And look at what you've built them over the last 3 years and see what the differences are and kind of start there. But there's definitely practical ways to approach it. It's just, you got to get started. And that's the part that most CPAs kind of fall back on because they're so busy. They don't have time. There's always an excuse as to why they can't change.
The prize at the end just seems to be either the same amount of money with a higher margin and less opportunity, or the ability to do less work per client and take on more clients and expand the practice. I'm guessing different firms will fall into different buckets. Either I'm like kind of good and it is lifestyle business, or I'm trying to grow. How should an existing firm and how should a new firm think about how technology and maybe AI can come into play with their firm and their pricing?
I think the cool thing about AI is it should be taking you less time to do the work that you're currently doing. So by utilizing that technology, you already have less teamwork on that specific job, because the technology should pick up the slack, right? So that's cool. So you need to think about that, but you also need to think about how you're going to build for this technology if you haven't changed your pricing. Are you going to build for a millisecond? I used to say, how do you build 2 minutes in the cloud? Well, like AI is like, not even a second, and it's going to give you all this work. So you have to change something. It doesn't work without changing it, right? So I think you just have to look at it as an opportunity. And I think you have to look at it as, what do I want to do with my firm? Do I want to stay where I am today, or do I want to build for the future? Because your competition is not the firm next door. It's not a big firm across the country. It's a technology company that's coming in and merging with professional services that is going to be your competition. And I think so many firms don't even realize who their true competition is. You have the Pilots of the world. You have all these new stealth startups that are specifically targeting one piece of what accountants sell, and they're building a product market fit for it it's crazy when you think about it, but it's also like exciting because like it's going to make CPAs up their game, and it has to.
It's I saw on LinkedIn you posted a poll that said, do you think bookkeeping firms will exist in 2030? And 24% of the respondents said no. Why do you think so many people responded this way?
So it's not that they're going to go away from a professional standpoint. It's the firm business model is going to go away, right? So it's not like AI is going to take their job. So let's get rid of that thought. It's the fact that the business model of the CPA firm is no longer relevant. When you see private equity coming in and buying up these firms, when private equity wants to exit, who are they going to exit to? It isn't going to be someone with a CPA license. It's probably going to be an IPO or someone else, right? So the firm model is going away. The partnership model never worked anyways. Like partnerships inherently have, so many flaws with them. And so my thought is that for like companies, we'll call them accounting companies, are going to now be the deliverer of accounting and tax services. And CPAs need to think about how we protect the profession as a whole and not the firm, because the AI CPA, I believe, now granted they get paid by all the firms, so you have to remember who's paying them, but they're protecting the firm, or they're thinking about the firm. And I'm saying, what happens when all those firms get eaten up or go away? Who's going to protect the profession? And I love our profession. I think CPAs are huge. They offer a ton of value to the public. And so how do we, maintain that CPAs are able to still deliver an ethical product? And, they keep all the things that we kind of, we believe, and that they still have a place in these new accounting companies where they're just delivering services, which again, the professional is not going away. It's just the corporate governance that I think is going to change. And we've already seen it changing. I mean, you look at the big firms, how many of them are being eaten up by private equity?
On that thought process, let's say you had a magic wand and you could make 3 changes to the accounting industry today, whether it's because you're deemed the new chair of the board of the AICPA, or you found a lamp in the desert and you rubbed it and you got the genie, whatever it happens to be. But you have the magic wand to say, there's no hesitation, there's no fear. These are the 3 changes that I'm making to make accounting exciting and relevant into the future, to make firms, whatever that sort of thing is. What's the goal and what were the changes that you'd make?
So I think I would make all the old school partners and everyone who's been in the industry for a long time go back and take like a data analytics class and like really learn what technology does and the power of it, right? Because they talk about it, but they really have no understanding or concept of it and how it could actually help their business, the businesses that they advise, if they really understood its capabilities. So I would re-educate the old school profession, right? Then I would take the next gen and I would make like a mandatory rule that says you do not work more than 50 hours a week during busy season, right? Like that's it. And say, okay, the rule is whatever, you're going home at 50 hours, and that's busy season, which is from mid-January to April 15th. Busy season isn't the whole year. There's no extra extent. Like I'm not saying you can't have a busy season, because that's like telling a gardener he can't like work in the spring, but that busy season is a limited period of time, right? And then I would invite in the technology vendors and I would actually give them a seat at the table to help us build tools together, because this disjointed industry that we live in is not helpful to anyone. And instead, we seem to be fighting ourselves instead of actually moving the profession forward and actually helping the end user, who's the customer, who at the end of the day, why are CPAs around? To make financial statements so that investors can make good investments. So if you think about CPA's core purpose, and I'm not saying audited financial statements, even like everyday financial statements, the reason you want a CPA or a CFO on your team is so that you know that you have trust in the numbers that you have. And you know that if you're taking outside investment, or investors have trust in the numbers that are coming, that are given, right? They're verified and they're trusted, right? And so until we have like kind of this thing working together, that's what our job is, right? And instead it seems like we just keep fighting each other, and so that's what the CPA profession needs to kind of continue to do in the future. And, I want us to be relevant. I spent too many hours studying for that exam. So
I think if let's take a future state, I want to paint a future vision of the accountant client relationship, whether you have your own firm or whether you're in-house inside of a company. Let's just say we're able to automate and generate those financial statements to a high degree of accuracy, whatever that threshold is. Let's just, the accountant, they're just say they can still double check and look at everything. Let's just say we were able to magically get that down to a fairly minimal amount of effort, and pricing could stay the same. Let's say there's no change to the client on the end pricing. It's just change. What do you think the future relationship between the accountant and the end client should be?
Well, it should be stronger and it should be more human, right? So the reason customers are frustrated with their accountants is because they feel like they don't get time. They feel like that they don't have the face time that they need, or the calls that they need, or the advisory services that they need. And the reason is because CPAs are so busy doing the work and trying to get it right that they don't always have the bandwidth to help their customer, right, in the way that they should. If automation does all this work, now you can be the human advisor that you should be and really help your client. And you have to remember, you're going to be walking alongside them. And CPAs learned how to do this during COVID. They were the financial first responders. When the rules were changing quick everybody was looking to their CPAs to help them guide them through regulations that weren't even finalized before, right? Like they weren't even official. And we were walking, like that's what CPAs do really well, is they make the complex easy to understand. And so that's what that relationship should be. And it should be walking alongside your business owner, helping them make the financial decisions that they want and know. I always say you're in their financial underwear drawer, right? That you know the detail. You didn't necessarily tick and tie it all, but you know the detail, and you can help them make good business decisions, and that they can feel confident and that their numbers are solid and they're making the right decisions. That's what a CFO or an accountant, like if you consider like a CPA who's working as an advisor, should be doing.
It's one of those things that I think also could help invigorate a lot more excitement into the profession going forward. There are a lot of people in college now thinking about what the major is. There's a lot of people who like accounting, its structure, its predictability to some degree. It's like it makes sense. And so I think as we come along and evolve, the profession evolves, whether it's because of automation or some third party or some regulation, the world of running a business is much more volatile now than it's ever been before. And you have people who have studied to become an expert in the language of business, how all these things fit together, how to understand what's changing and what are the business drivers. And I always found that I don't really care how or when or in what method the financial statements get generated. I want to have a conversation after it's over, because building a business is part art and part science. And the science part is just getting that financial statement there. The art part is, well, what do we do? If this is a reality of a business, what do we do? And things change so fast. We have a pandemic, interest rates change, debt becomes available, equity becomes available, industry gets hot and gets all these investments. How do we provide confidence to the industry that you can, and I'd actually frankly pay more for that. Like the thought of paying somebody to do the same work month over month to track all these things together manually just feels, frankly, it feels wrong. I'm probably biased as like a software founder along the way. But those last conversations about what this means and how do I make my business better is the part that I think is this really big opportunity that is getting seeded away from accountants to finance people and strategic investors or strategic finance people and business partners who are making these decisions. How do we get accountants back into these rooms and leading these conversations instead of sometimes not even involved in these conversations or not having these conversations?
Right, which is unfortunate, right? Because a lot of times, people come in who don't even understand the financials and are giving advice. Like and it's like, whoa. But I think it's training the accountants, right? So remember, like real time was the disruption. Well, guess what? CPAs never fixed their training after real time disrupted the industry 20 years ago. They never really went back to case studies, which I think is really kind of like, how do you use this information to tell stories? How do you really help people understand what this information is? Now, partners get it because they had so many years of experience. And so they understand the relationships because they've been around the block, right? But that next generation, they don't necessarily get it because they haven't had all the connections being made. So you have to train them differently, and we haven't trained them differently. So the first thing we need to do is we really need to teach them a different way of having conversations, because right now all they've learned is technical. They haven't learned the art of the story. They haven't learned the art of the case study or all of that. And so I think that's the onus on the profession as a whole to like go back and say, look, real time disrupted our profession 20 years ago. That was the beginning of our conversation, right? We never changed the way we trained our professionals. And maybe that's what we should do. Maybe we should rethink about how we're training them and give them the skills that they need. And I would argue, and this was, again, there's a lot of hubbub around the 150-hour rule. When Anderson started Anderson Consulting, they hired English majors and history majors, and they taught them the financials. They hired liberal arts people. They didn't hire accountants. And so maybe, again, that's the thing. Maybe we go to hiring, if there aren't enough accountants in the world, maybe we go find those music majors, those history majors, those English majors, and we teach them the business of accounting. And then we teach them how to be really good advisors. And again, this is stuff like you have to think outside the box if you don't have talent. So what are we going to do to kind of change it up?
Well, it sounds like we have an idea for book number 4. But in the meantime, where can people find you and where can they find your new book?
So you can find me online, and LinkedIn is probably the best place to connect with me. Follow me. You can reach out to connect to me there as well. And then my book is being sold at cpatrendlines.com. And CPA Trendlines is an amazing publisher. Rick Telberg runs it. It has a lot of different books all about accounting in general. So they're really like, if you want to learn how to review a tax return, you can buy that book there as well. So it's really a great little bookstore.
Awesome. And we will link to it in the show notes. Jody, thank you so much for being so generous with your time and your advice and writing and being an advocate for bringing accounting into the future. We all appreciate it.
Awesome. Thank you.
Bye.
Thanks for tuning into Turpentine Finance. Share it with your executive team, direct reports, friends, and family. And if you want to support the show, the best ways are to leave a review wherever you're listening and subscribe. Turpentine Finance is part of Turpentine, the podcast network behind Moment of Zen, Turpentine VC, Age of Miracles, and more. Shows for experts by experts in tech.